The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the 13th of September 2019. Well, as I normally do, I like to start off the stock market. And the stock market is still in a confirmed uptrend. And we're approaching summer highs. Boeing, Apple, Caterpillar are leading the Dow higher. The industrials are getting near a breakout. Maybe doing this early Friday. And the stock market, by most metrics, is looking good. As I've said, it's overvalued, but that doesn't mean it can't be overbought and make new highs. So there's that. The small caps are also participating in a rally. They've been basically in a downtrend since early this year, about March. And just recently, during this last few trading sessions last week or so, they too are breaking that downtrend line and moving to the upside. So if you're a stock investor, it's looking pretty good for you presently. So first up on articles, this is from Forbes. And federal budget deficit tops $1 trillion with no end in sight. It talks about, since last October, increased military spending, rising interest rates on the government debt, and weak revenues earlier in the year have caused the deficit to rise by 19% to $1.07 trillion compared to $898 billion a year earlier, based on data released by the Treasury Department Thursday. Revenue growth has lacked the broader economy, while federal spending has steadily trended upward, particularly in sectors like defense and Medicare. So the debt continues, and this is no big surprise to anyone that listens to the weekly update. This is an article titled "Questioning Lagarde as Gross Interest Income in Germany Heads Toward Zero," showing a graph of the interest rates. Collapse of interest income in Germany. Extremely accommodating monetary policy of the Euro Central Bank has had huge redistribution consequences. The disposable income of savers has been hit by the collapse of the average return on their accumulated wealth invested in interest products. Low interest rates have benefited borrowers by boosting asset prices. The decline of interest rates has favored the small segment of wealthy households who own securities, potentially increasing inequality. Basically, how can this negative interest rate policy survive? And the answer is, I don't know. I doubt it will. But yet there's something like, 17 trillion worldwide in this negative interest rate category. I mean, it's pretty crazy what's going on. It's counter to everything that you'll learn in business school or finance, where everything is built around the net present value and the future value of money and assumed interest rates, and on it goes. And when they're negative, which is new for anyone really, it's not only a shock to the system, it remains to be determined how it's going to unravel, but it probably won't be that pretty. Time will tell. A lot said daily about the trade war, and this is one from oilprice.com, great website. I'm on here very often. Won't read the whole article, but I think it's important. The title: "The U.S. massively underestimates the trade war blowback." It talks about under the Obama administration doing sanctions against Russia when it annexed Crimea, and it worked for a little while, threw Russia into a short-lived recession, but it had more dire consequences because Russia became tighter with China, and Moscow saw Beijing as being a great alternative to Western financing for Russian industries. At the same time, Western companies were forced to withdraw from the Russian megadeals because of the sanctions. Best known example is Exxon, forced by sanctions to walk away from the Arctic joint venture with Russia, where it had invested $3.2 billion. So again, I'm not going to read the whole article, but these unintended consequences. And in a trade war, no one really wins. It's a war. Like a war, there aren't really any winners. There's just people that might have less damage. This is very much in line with the thinking du jour. Not to say that there aren't some huge discrepancies and there's a lot of misallocation of capital and everything you've heard me say. And I'm neither left nor right, really, but this is kind of an interesting article on CNBC. Billionaires hurt economic growth. It should be taxed out of existence, says best-selling French economist. Now, this is someone controlling someone else's life, and that I am not for. I'm for freedom for everybody. I'm not too big on the handouts, and I'm not too big on the current economic situation. I'm more for freedom, and that means free economics, and we really don't have that anywhere. I mean, you can make an argument that it exists in the United States, and there's segments where it does. Also, you can make a strong argument that parts of China has real free market economics, and Mexico and almost any place in the world. A lot of those places you consider it to be, or the establishment would consider it to be, a black market. Enough said on my digression. Interesting article, and the reason I chose it to put up this week is because this is sort of the thinking of, let's say more of the left, and I don't want to pinpoint anybody or get anyone upset. I try to stay fairly neutral on the politics, but the idea that you're too poor, too rich, and I'm going to fix it for you rather than let the person work on himself. Very interesting. If you're interested, you can look further into this article. But again, the title gets... And I'm not saying that some of these billionaire types are not hurting economic growth. What I'm saying is that I don't agree that they should be taxed out of existence. Back to one of the main themes I pound on week after week is the economy is actually contracting, not expanding. Remember, a lot of what I do and others in the financial field is really not contributing that much to the economy. I'd argue my situation with getting assets out of the ground that are needed or wanted and then putting them to productive use is probably more beneficial than just pushing a bond across the table to a pension fund. But regardless, the economy is contracting, and there's so much going on in the financial world. It's interesting to see this Reuters article that brokerage giant Charles Schwab says it's ready to cut about 600 jobs. Now, that could be not only that it's contracting, it could also be that, robots are doing more of the job, computers, software is doing more of the jobs, and that type of thing. Nonetheless, the bottom line is 600 people are going to be out of work in the brokerage industry. More on the contraction from USA Today, not one of my favorite publications, but, it's a free market. Get out there and do what you want. So GameStop's closing down probably 200 stores globally, another contraction. More contraction. CEOs abandon ship. A record 159 CEOs exit in August as overall layoffs surge. Doesn't sound like the economy's doing as great as we hear in the mainstream press, does it? Another Reuters, BAT, stubs out 2,300 jobs as new CEO tackles tobacco sector changes. British American Tobacco, BATS, plans to lay off 4% of its workforce, including a fifth of senior managers, as recently promoted Chief Executive Officer Jack Bowles grapples with challenges of the group's legacy products and health fears over vaping. So there you have it. Contraction, 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 and some more contraction. All right, Blackrock. Hold gold. Global currency debasement looms. And Blackrock is certainly well known. This is from Kitco News. Chief Investment Officer of the world's largest asset management firm is recommending investors to hold some gold to protect themselves if central banks introduce aggressive monetary easing policies. Well, that's pretty much a given. In a commentary published last week, Chief Investment Officer of BlackRock said, central bank action around the world has done little so far to push inflation back to 2%. He added that if central banks want to achieve that goal, they're going to have to get a lot more aggressive, which means sovereign debt yields will have to fall further into negative territory. Well, it's not working. Let's do more of what doesn't work. That's called insanity, and we'll see where it leads. It is time to buy gold. I did do an update for our paid members explaining that I felt the top was in for the gold market temporarily, how long I think it's going to fall back, where it's going to fall back to, what the buying would look like based on those 2 points, and also exactly what to do if I'm wrong. So there are some sales going on. I never tell anyone to sell their complete positions, but part of it. Take some profits. It's always good to take some along the way and book them and wait for the next buying point, which again I outlined for our members. So let me talk a little bit. Gold is, again, I think it's topped. We may see a nice bounce next week during the Fed meeting on the 17th and the 18th. Probably will, but I don't think it'll take out the recent top. And this is just a back and forth in an overall bull market. I'm convinced that the bull market's intact. All I'm saying is that we're going to see a pullback for a while, probably longer than some of the bulls think at this point in time. Regardless, it will be a higher low than the breakout point of 1350, probably by a pretty wide margin. And I'll finish off the silver market here. The Silver Institute came out with their silver news, and it was, as always, very enlightening as far as the silver market. Some of the headlines here: silver could help patients take multiple drugs at the right time. Promising research yields new clues to how silver tarnishes. Findings could improve silver's reliability in electronic components. Another one: silver keeps bacteria from forming in dental implants. Another one: patented process turns mine waste into fertilizer. One of our members asked about this because we have a couple companies that are well noted by Morgan Report members that are on the technological side. The one that he was referring to does not use it as a byproduct as fertilizer. It uses it as building materials. Although there is another one that I don't have in the report anymore, but I'm certainly very familiar with the process and the CEO, and I've actually interviewed him in the public domain not that long ago, and they do use some of the recycling process that he invented as fertilizer, which is very interesting. CSI meets AG, which AG is a symbol for silver. As you know, one of the mainstays of popular television shows like CSI, Crime Scene Investigation, aired worldwide, is how forensic investigators are able to detect blood at crime scenes. Too often in real life, however, the samples are too small to be detected until now. It talks about how silver helps that. The U.S. Mint and Royal Canadian Mint issue 2 new silver coin set, as you can see here, and that will finish it for this week's weekly perspective. I'll be back with you next week. And if you're interested in subscribing to the Morgan Report, go to themorganreport.com and get our free newsletter, which comes out about 3-4 times a week. And it's the weekend version always has the weekly perspective that I'm doing right now. And then on top of that, if you're interested in the membership site, you can go to themorganreport.com, go to the subscribe button, and read the sales letter, listen to the video, and determine whether or not you want to get some better insights into the resource sector at large, although I have to say that right now we're pretty focused on the gold and silver sector primarily, and this couple of technology companies that deal with the precious metals, because I think that the commodity boom is pretty much over outside the ags, and the agricultural commodities aren't really necessarily going to boom. They're going to go higher in price due to crop failures, weather problems, losing some of the stored materials or foodstuffs because of what happened in the Mississippi Valley or tributaries not too long ago. So I've been saying that for a while. Until next week, it's David Morgan signing out. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.